Yesterday, Bitcoin and Ethereum have both seen a big pump towards the upside. I'm actually currently bearish and I think downside is next. In today's video, I'm explaining my short ideas on both Bitcoin and Ethereum and also what short positions I have entered right now. The first thing I see when I look at the Bitcoin chart is that Bitcoin is seeing a push towards the upside over here. That push towards the upside is not one that I would be trusting. Because when I mark out the weekly close over here of the CME and the weekly open of the CME over here, aka I'm basically marking out the weekend price action over here, we can see that the majority of this push towards the upside on Bitcoin was taking place over the weekend. Now, one of the core rules of my QPA strategy is that any move that takes place over the weekend, aka this push towards the upside over here, can never ever be trusted. And what it is basically doing is that it's what I called engineering weekend liquidity towards the downside over here around $83,500. Now what is in line with that level as well is that when I go to the daily time frame is that we can see that last week on Friday we put in a big wick to the downside over here on the daily. That big wick to the downside on the daily was sweeping into a very important sell-side liquidity pool over here. Now we know that big wicks into sell-side liquidity pools act as a draw on liquidity, and sooner rather than later they get filled at least for 50% or for 100%. So if I mark out at 50% wick fill level, we can see that it exactly aligns with that weekend liquidity pool that I just marked out on a 15-minute time frame. So in my opinion, that is a double confluence for more downside, and the draw on liquidity is currently resting around $83,500. And we know that price is always attracted towards big liquidity pools. So that means that I'm currently bearish on the price of Bitcoin and that I was looking for short triggers, which I'm already getting right now, because we can also see that at the exact same time Bitcoin is taking out a major buy side liquidity above this high over here. Why is there a lot of buy side liquidity resting above this high? Because we can see that we form a low, we form a high, and then we form a lower low. This high over here fuels this impulse to the downside that gave us this fake market structure break. Okay, this is a low probability fake market structure break to the downside, and therefore I think a lot of people that were FOMOing in on this push to the downside, they were placing their stops above this high over here. Also, the majority of the people that are shorting this push towards the upside over here, right, based on this impulse to the downside, are also placing their stops above this high. So a lot of buy side liquidity was resting above that high. Now we can see that we are currently mitigating the buy side liquidity, potentially trapping buyers, right, because a lot of people are looking at this impulse to the upside and they think price is going to continue higher, so they start foaming into buy positions over here. Now we can see that all of that is happening around this area over here. So there's a lot of stuff going on, and I think we are potentially distributing over here before more downside. Now why do I think that we are potentially distributing right there? Because when I navigate towards a 15-minute time frame and zoom in a lot more, we can see that we are putting in a high probability QPA bearish reversal structure. Because what I can see is that as soon as we take out the buy side liquidity, this high becomes significant, this high becomes significant, and this high becomes significant, because they all mitigate that very important buy side liquidity pool over here. Now, after mitigating that very important buy side liquidity pool, when we analyze the structure, we can see the price forms a higher low over here before it forms a higher high. Since this low over here brought us to this higher high, we know that this low, since it brought us to that higher high and not to a lower high, becomes a significant low to break. Now we can see that right afterwards that indeed that low got broken towards the downside. So this is what we call a high probability bearish QPA reversal structure.
Stop being a fucking donkey and stop revenge trading at 2 AM in the morning. What you should do instead is like this video, subscribe to my channel, and keep paying attention because the video is not done yet and there's educational stuff to learn from. Let's go.
Now what is in line with this idea, and that is what I think is very, very important, is that we have a bearish SMT as well that was forming over here. So where Bitcoin over here was forming a higher high, at the exact same time, in a little bit I will show you guys why Ethereum was forming a lower high, and that is what we call an SMT divergence. I will leave a link to more explanation on what SMT divergences are and how you can use them in your advantage in the description down below. So make sure to check out the video after you have watched this analysis video if you actually want to improve as a trader. So we have that SMT, we have those significant highs that are mitigating that liquidity pool, we have that significant low that brings us to that higher high that we then break through to the downside. So we have a high probability QPA reversal structure, and we also have our draw on liquidity over here. Now what I really like about this high over here as well is the timing of that high, because if I mark out the weekly open over here, and I'm going to mark out the the Monday closure over here, we can see that this high was formed on Monday. Now why Is it so clean that this high was formed on a Monday? Because when I look at the weekly time data on Bitcoin and I select the last 18 months of weekly time data, we can see that 69.2% of weeks form the first pivot for the weekly candle indeed on the Monday. That is almost 70% of the weekly candles, meaning that Mondays tend to put in the high or the low for the week.
A few spots for the mentorship are now open. What we're doing is that in the link down below, I have an application form where you guys can apply for the one-on-one mentorship program. There's only limited spots available and I don't allow everyone to join the program. First you apply, then we have a chat, then we hop on a call to see if you are a good fit. I only want to mentor a couple of people at the same time to really devote my time and energy into that. If you think you are a good fit, make sure to go to the application form down below, fill out your information and fill out why you think you are a good fit, and maybe I'll get in touch with you.
Right now, what would confirm this as the high for the week on Bitcoin is if we manage to sweep the low for the week that was formed currently over here. If we get this sweep, that means that this is currently our P1 because it got formed first, and this is our P2 because it got formed second. In that case, we would have a P1, P2 flip, and then I think we will see a bearish week for Bitcoin, at least towards $83,000, but maybe even towards $80,000 and beyond. Now, when we look at the daily for Ethereum, we can see that ETH was pushing into this bullish daily fair value gap. Once again, while pushing in towards that bullish daily fair value gap, we can also see that Ethereum, just like Bitcoin, put in a big wick to the downside over here on the daily. When I once again mark out at 50% wick fill level on the daily time frame and then navigate towards a more zoomed in view, we can see that we have been front running that 50% wick fill level over here with a daily candle that we formed on Saturday. So that means that in my opinion, that draw on liquidity is still there on the daily, right? Because we have front run that level. Now going towards the 1 hourly time frame, we can indeed see that we have a beautiful front run of that 50% wick fill level. And I kind of expect that 50% wick fill level still to get hit this week on Ethereum. We can also see that right now Ethereum is retracing this bearish inefficiency that it had put in over here. Was a very big inefficient candle. We know that they tend to get retraced, and at the exact same time Ethereum is also taking out a lot of buy side liquidity over here above this high, just like Bitcoin was doing. Now navigating then towards the 5-minute time frame instead of the 15-minute time frame, we can see that we are looking at something similar as we were for Bitcoin, in which Ethereum, instead of on the 15-minute time frame, in this case on the 5-minute time frame, is putting in these significant highs, right? We can see 1, 2, 3 leading to a push to the downside, breaking structure to the downside over here on the 5-minute time frame as well. Once again, just like for Bitcoin, also Ethereum is putting in this strong high on a Monday, and that is something that I personally really like. So we have those significant highs mitigating the buy side liquidity pool, followed by a push to the downside and a break of structure to the downside on the 5-minute time frame. On the 15-minute time frame, we can see that it's not visible. So that means that the structure is visible on the 5-minute, but not on the 15-minute time frame, and therefore there's a lower probability to succeed. But still, I do think that this is a high probability QPA reversal structure. Now, why do I think that? Because over here on Ethereum, indeed, we have that SMT with Bitcoin. So where Bitcoin was forming that higher high, like I explained in the previous analysis, Ethereum at the exact same time is forming a lower high. That is what we call a bearish SMT, smart money technique divergence, that is indicating a potential reversal towards the downside. So looking at this on the 15-minute time frame, I think this looks quite bearish, and I think that this looks potentially pretty distributive, and that we might be seeing a leg to the downside today on Ethereum as well, towards a weaker liquidity pool that is also in line with a 50% weak fill level on the daily, just like for Bitcoin. Now also Ethereum for now still has a strong weekly low over here. So we have our weekly open level right over here for Ethereum, and then we first form the low and then we form the high, meaning that this low over here is our P1, our first pivot, and the high over here is our P2, our second pivot. So in order to really see a bearish week on Ethereum, in my opinion, it needs to break that low though, and that would confirm a bearish week towards the downside, at least towards $2,700, but probably even beyond, maybe even towards $2,500 for the price of Ethereum. So let's see if this bearish trigger over here plays out. We can still see a local sweep over here. If we do see a local sweep over here, followed by a push down back inside of basically the range high and the range low area that we have over here, I think that could be a nice trigger to then maybe get a stop loss over here, add some margin to your short over here towards the downside. For now, the invalidation for my bearish thesis is above the current weekly high. We might sweep it, then see bearish confirmation. That is a final scenario that I'm potentially interested in as well. My bias remains bearish for now on both Bitcoin and Ethereum, and let's see if our bias is going to play out.
I hope you guys enjoyed today's video. If you guys did enjoy today's video and short trading ideas on both Bitcoin and Ethereum, feel free to let me know. Also, if you guys have any questions, feel free to let me know as well in the comment section down below. If you think you are a good fit for the one-on-one mentorship program, fill out the application form down below in the bio as well. And over here, there's a new video appearing in the screen where I go more in depth on what an SMT divergence actually is.